can I sort of bring it right down to basics, which is, nevertheless, we can talk about this wonderful world and sort of multi-channels and new technologies, but most people, when you talk about them, are irritated by banks, and it's for kind of small little reasons, and we're all bank consumers as well as bankers or bank people involved in the banking industry. So I wanted to sort of just talk a little bit about the things that actually frustrate people and see if we can come up with some solutions to them. So I'm going to tell you what frustrates me most about banks is when I open an account with on the basis that it's going to be a high interest rate account, and then I go around the world traveling and writing stories and things, and then when I look at it later, the bank's just decided that they've kind of wound that product down, and the high interest rate account is somewhere else. Okay. Now, to me, that is not the bank looking after my best interests. So, I mean, how can it create loyalty with me? And I'm sure everybody else has got experiences of that type. But you can see why, from a business point of view, it probably does make sense from the bank's point of view, because they put out a new product, and they draw in funds, and then they they move on. They have another marketing initiative. Patrick, is that something that you kind of struggle with at Citi? Have I hit the nail on the head?
Yeah, this is a great issue, and it should be a 3-day event, I think.
Okay.
I think Anthony has a phenomenal opportunity to build a bank that doesn't do those things, because the legacy needs for creating liquidity at a moment's notice, and all of those other things that drive, almost ends up with a world where the bank's model and the consumer's model become directly opposed. So if you want to bring in £1 billion worth of deposits that you then want to lend out as mortgages, then if you go out there at the moment with a base rate guarantee product of sort of 0.5%, you will get no customers, apart from a few phone calls from sort of Central African countries about they have a friend who has a few $1 million that he needs to get out of the country, type phone calls. And so you can't offer a savings account instant access for 3% because you're paying 6 times the bank base rate. So what's happened is there's become a mismatch between what the deposit rates that the banks are getting and using, and actually what the customer is expecting. So the customer's expecting something like 6 times, 5 times the base rate.
We're getting customers every day who are coming into us and accepting 0.5%. For customers, it's not about rate, and I think this is a fallacy that the UK banks. And
but because you're offering a superior service, though.
Absolutely, but everyone assumes that customers only move for rate. We know that only, according to the OFT, only 7% of consumers choose their bank because of rate. 93% choose it because of reasons of service, convenience, and recommendation.
Which is why I said at the beginning, you have the opportunity to build it from scratch without doing those things.
And I think the reason the existing banks compete on rate is because they have nothing else to compete on. They've assumed that that's the only thing that drives consumers. They've disinvested in their distribution networks. They've disinvested in their service delivery to their customers. And the result is the only thing they can try and compete on is rate.
What you are describing essentially in our thinking is the dilemma or the controversy between relationship approach and traditional product approach, advisory and sales. And when we would be talking about customers with more complex needs, with more business potentials, what we would be lacking for is the true advisory approach, which of course sets quite high standards for the customer, for the bank, in terms of leadership, in terms of culture, in terms of values, and putting the advisory to the core of the value proposition really means that you will need to stand for it, and also do the kind of choices that would be seemingly harming the bank P&L on the short run.
Yeah. Mark, You haven't said what irritates you most about banking.
Well, I'm actually fairly loyal to my bank, and I think it's only about customer service. That's why I'm loyal to them. I don't look for rates.
Yeah.
I was interested to say Vetrobank is our client and obviously has a very clear view of its approach to the market and has been very successful. I think part of it is around transparency. We have another startup client of ours about 18 months ago in France called Beaver Bank, and they would say exactly the same thing you would say, which is it's not about rate, it's about service. Even though their market's different to yours, it's an online bank, it's an online mass affluent deposit taking bank.
Okay. All right, well, let's move on now to talking about actual banking products. And I think we're all kind of sort of the view perhaps that, you know, it's more about, it's not about churning out products for some sort of market out there that we don't know. It's much more about kind of, you know, sort of, well, Anthony said I couldn't use the word unique, but I was going to say uniquely designed products. But Anthony, tell us about your views on what are the right products.
I don't think products are the differentiator.
Right.
I don't think one differentiates through products.
Yeah.
They are so easy to copy. Rates can be copied almost instantly. Depending on your balance sheet funding position, you may be able to come with a more competitive rate. I think the point of differentiation comes through the way in which the products and services are delivered. I think Topi raised a very, very interesting point just a moment ago, which is that of sales. I fundamentally believe that if you incentivize customer-facing staff through sales targets, the outcome of that is mis-selling. The outcome in the UK is the 11,000 complaints about banks every single day.
Yeah.
Actually, that's when the old banking model of branch banking for us as consumers rather than in the industry sort of changed. But you know, there's clearly a difference between when you're in startup mode and when you're sort of slightly more grown up with shareholders and pressures on capital and resources. Is by rights we would all be with First Direct because their customer satisfaction scores and advocacy scores are off the charts. I'm sure you'll beat them in time.
And their margins are very good too.
But I won't talk about their profitability because I don't know. But in terms of customer numbers, by rights, the advocacy model would have us all now with First Direct because they're far and away better than anybody else. But yet they don't have that sort of market share.
Mark, do you want to say anything about the whole this sort of idea of the business model and also whether you know whether products can be delivered successfully this way?
I think in our experience in the developing world, I'd agree with exactly the developed world. I'd agree exactly what you say. Our clients want more straightforward. Our clients ask us for more straightforward products with more transparency. It's different in the developing world where there's a lot of more product innovation. People want very fast turnaround of new and interesting products. Very different kind of market. But in the developed world, it's exactly the case that, you know, and if what they ask us for is they want to buy solutions is a lot more about understanding their customers, about understanding the segmentation of their customers, about customer service than they ever ask us about product now. They're not competing on products. They're not competing possibly on rates, but they are competing on customer service, no question.
Yeah, all right. But that requires a lot of information about the market.
Yes, and the customers as well. Yeah.
All right. I mean, do banks actually have all that information at their fingertips?
They don't. It's we find it. We tend to be in the sort of system renovation business. You know, banks tend to replace systems unless they're new startup banks, and it is amazing to us sometimes how little they do know about their customers when we replace the systems. You know, one of the values that they get out of putting a new system in is understanding their business and understanding their customers, and that's what any kind of new system would deliver them. And it's amazing how little they know, and it's amazing the change that leads to, almost unexpected change from replacing effectively the justification for replacing a core system might be something purely around process and speed, but then what they get back just paying a modern system totally transforms their understanding of their customer base. It means they resegment, they change businesses, they close businesses down, realise they're not profitable businesses, realise things like that. So it's a huge amount of information that the banks get when they put in a modern solution.